on the session in general, we were just saying maybe not as bad as some would have expected, down about 0.2%. What did you think of it?
I certainly agree with you. I don't think it was quite as bad as we were expecting. It was a fairly volatile day on the market. However, we did see a lot of those energy stocks as well as resources and banks coming into focus after we did see them being sold off to fund this Woodside deal, as you were talking about earlier. But really, that materials sector was the worst performer today, as well as the staples area, both down around 0.7%. We did see iron ore falling off overnight to below that $90 a tonne level. So we saw BC Iron closing down around 3.3% and Fortescue closing down around 3%. So those stocks certainly coming under pressure. But as well, those gold stocks were the worst performers. So the likes of Newcrest, Regis and Medusa. Newcrest closing down around 2.5%. That energy space closed down around 0.35%. And obviously that was a result of some institutional investors selling off to buy back into Woodside. We did see Oil Search closing down around 0.5% and Santos down around 1.5%. And we also, of course, saw those financials coming under pressure. So all four of the major banks were lower as well. Really, the sector that was holding up our market today was that property trust sector, and that was being led higher by Westfield Retail Group. In fact, the WDC shares closed up around 2.6% after we did hear out earlier that that restructure deal might be going ahead of that vote on Friday. So overall, though, it was a fairly optimistic session despite closing down around 0.2%.
You back in, just want to get your views, I guess. Do you see the market at a risk of a correction from here on, given these issues we're seeing out of Iraq, geopolitical tensions?
I do potentially think that shares could be a little bit vulnerable to a mid-year correction, although we haven't seen too much movement around this violence in Iraq. However, I do think that worries over in Iraq could potentially pose a short-term trigger. However, we think that this could potentially only be mild. Having a look at the tensions over in Iraq, we do think that there's probably a couple of concerns. Firstly, that Iraqi oil production, which we do know accounts for around 3% of global oil production. However, a lot of the conflict at the moment is happening up in the north of Iraq, where we know a lot of the oil comes out of the south, so that potentially could be protected. And obviously, secondly, the second concern is that there potentially could be a threat of wider Middle East conflict. However, we often do see a lot of this Middle East conflict flaring up and then settling back down again and not eventuating into a broader conflict. So we're hoping that it might be the same situation in this case. However, whilst Iraq could turn out to be a trigger for a mid-year correction, we do think it's unlikely that we'll start to see a disruption to the global economic recovery. We do think that that broad uptrend in shares is likely to remain as it is, and any dip that we do see could potentially be a buying opportunity. We do think that share market fundamentals do remain pretty favourable with reasonable valuations, global earnings obviously improving, and of course those monetary conditions remaining relatively easy for some time.
We're seeing where it's spending some of its war chest of cash on this buyback, but what else are investors wanting to see from this?
Well, today's announcement certainly is positive. We were estimating they had that around $3 billion to spend in either merger and acquisition activity or potential return of capital to shareholders in the form of a special dividend. So certainly this buyback that has been announced today is positive. We do think that that transaction will optimise the value for shareholders. However, on top of that, having a look at the broader outcome for the stock, we do still remain very positive on the outlook. We do think that Woodside has very strong underlying fundamentals. It has a very strong balance sheet with low net debt, and we do think that 80% payout ratio is sustainable until around 2020 and potentially beyond that. It obviously has that very strong dividend yield of around 7% as well, and the company has indicated today that they potentially may be looking to increase dividends over the long term, so that potentially could increase above that 7% as well. We do remain very confident in their current projects and the growth of Browse and Sunrise as well. So although Woodside might not have the growth profile that, say, Oil Search and Santos have, we do think that Woodside is more of a lower risk option, and of course it does have that very attractive dividend yield, so we do remain very positive on the outlook.
Just on other corporate news, Westfield Group doing pretty well today. I think it's up almost 3%, a bit of a bright spot on the market ahead of the vote for that restructure, looking a little bit more likely.
Likely today we did receive reports that a handful of investors have in fact changed their tune around this restructuring deal, and according to sources, around 3 major stakeholders are now likely or prepared to support the deal, and their collective ownership accounts for around 1% of that shareholder register. We do know that the biggest concern around this is getting that approval from Westfield Retail Trust shareholders. We did see the approval reached around 74.1%, but they do need that 75% approval. So having that extra 1% on the register could potentially mean that they get across the line. However, of course, we do need to take into account that there may have been a bit of a change in vote by some other shareholders. So it still is very uncertain at the moment, but certainly news today was positive, and we did see that Westfield or WDC shares trading higher, and we also saw WRT shares trading higher. The biggest concern really is that shareholder UniSuper, who hold around 8.5% in WRT, and they really are strongly suggesting that they still oppose this deal. So we do think they are going to be the biggest problem, but certainly was fairly positive news today.